What's up, you guys? It's Paul here from the 9 to 5 Investors Club channel. In this video, I'm going to show you exactly how you can use Iron Condors around a company's earnings to take advantage of the potential IV crush and make a pretty decent profit, okay? Now, the only time Iron Condors really work is when you're expecting the stock to stay within a range, and as long as it stays between both your short call and short put, you will make the maximum profit because all of them would expire worthless, okay? But the reason this is helpful when it comes to earnings is because a lot of times people are anticipating a huge move after earnings, and because of that, there is a lot of the premium on the options are usually really high. And as soon as the earnings come out, if the stock doesn't move a whole lot, then a lot of those premiums get crushed, otherwise also called IV crush, and that way you end up collecting a higher credit for opening the Iron Condor prior to the earnings. And after earnings come out, because of the IV crush, you'll get to keep a pretty good portion of your initial premium that you collected, okay? So in this case, Pinduoduo, they came out with killer earnings. They provided a surprise profit when analysts were actually expecting a loss. So they did go through a huge spike here. So what I did here was, because the premiums were already high after this big move, I picked up a quick Iron Condor where, as you can see here, I sold 10 of these 140 calls and bought 10 of the 145 calls, and I sold 10 of the 130 puts and bought 10 of the 125 puts to collect a total credit of $1645, okay? You'll see the math way down here. I sold 5 first for $805 and 5 more for $840, so that's a total of $1645. And because this is a single day and the stock shot up so much, and the fact that they expire tomorrow, a lot of the premium is potentially going to get crushed tomorrow as long as it stays between 130 and 135, okay? The fact that it stayed flat throughout the day is perfect for Iron Condors. That's why even though the stock didn't really do much, these Iron Condors are up 19% for a profit of $315 so far, okay? So tomorrow what I'm going to pay attention to is to be sure that it stays above 130 or below 140, and depending on how it actually works out, I'll probably close out of it before expiration, and this should be an easy $1,000 to $1,200 profit if PDD doesn't move a whole lot tomorrow, okay? Here's another example of how you can use an Iron Condor for Disney's earnings. So with Disney came out with earnings after hours today. They haven't moved a whole lot. They dropped a little bit during the day. So what I did for Disney, especially because Disney typically doesn't move that much since it's a typical value stock here, I got a bunch of Iron Condors, especially for Disney. Okay, this is kind of a complex trade, so I'll move through it slowly so that you understand everything properly. Okay, so first of all, in this case, what I did was I sold at the money calls and puts. As you can see here, Disney was trading close to 138. Let me open up the stock. So before earnings were coming out earlier today, Disney was trading around 138, and that's when I started selling Iron Condors, okay? So this first Iron Condor that I sold 2 of the 136 puts and 2 of the 137 calls, which were at the money calls and puts. Simultaneously, I bought 2 of the 131 puts and 2 of the 142 calls, and this gave me a total credit of $327 per Iron Condor, or a total of $654 for 2 Iron Condors, okay? And later on, I sold 3 more Iron Condors at a slightly different strike price, which you can see here, where I sold the 138 calls and the 137 puts, and then simultaneously I bought the 143 calls and the 132 puts as a cover, and this gave me a credit of $333 per Iron Condor, or a total of $999. So if we combine both the Iron Condors, that's a total credit of $1654, okay? Now, the goal is for Disney to stay between this range ideally, but because these were at the money calls and puts, since Disney did end up moving a pretty decent amount after hours, which is 3%, at first it shot up quite a bit, up about around 6%, up to 143, 144, which would have been above my long call as well, which would have been the maximum loss position. In this case, since it actually came down closer to 140, I'll be paying attention to see how it moves tomorrow, and I'll likely sell out of it soon before expiration, because both the short calls on both the Iron Condors are actually in the money, and that's the case when you don't want to get assigned on your shares, okay? So the key thing to keep in mind in this case is that the premiums were still relatively high for Disney, considering they were expecting a big move, okay? Even recently, if you look at the price history, they saw this big move up here sometime earlier this week on November 9th when the vaccine news came out. And so because of this huge movement leading up to earnings, the premiums were already high. Usually Disney options are relatively cheap. So that's another reason why I decided to go with an Iron Condor, because the premiums on it were a lot more expensive than they normally are, okay? Now, as a hedge against my Iron Condors, in case they did spike a lot to the point where they were above my 143 call or below the 131 put, what I did was I also got a couple of these strangles for a week later, okay? So the Iron Condors were going to expire tomorrow because you want to take advantage of the IV crush so that most of the premiums get crushed and you get to keep a good portion of the credit. But with the Strangle, you want to give at least a week out, because once earnings actually come out, investors have a much better idea in terms of how Disney is performing, and then they either decide to start putting money in again or sell out more, okay? So a real continuation can happen tomorrow or even next week, which is why I decided to get this Strangle for November 20th, okay? So for this Strangle, I first got the 147 call and the 127 put for a cost of $7.15, and then the put started appreciating quickly because Disney was going down leading up to earnings. And so what I did was I decided to sell out of the 127 put, and I bought the 123 put for a credit of $285, okay? So if you do the math here, my net cost for the Strangle was only $440, and from the Iron Condor, I got a total credit of $1654. So if you do the overall math, $1654 minus $430, that's a total credit of $1224 for having 5 Iron Condors and 5 Strangles, okay? So that's why I'm not too worried about Disney going above my long calls or puts tomorrow, because I still have a credit of $1224 to work with. And because of the 3% move in Disney, there's a pretty decent chance that even these calls can move up a little bit, so it ends up kind of offsetting the potential losses on the Iron Condor, okay? Either way, I don't think it's actually going to be a loss in the Iron Condor because the credit was really, really high with the high premium leading up to earnings. So in my opinion, as long as Disney stays within that range and doesn't really move big until next week, this should end up being a pretty profitable trade, okay? I will make a video again tomorrow to give an update on how this works out so that you better understand how the premiums actually move with a move like this in Disney. So that's all I wanted to share with you guys here for today. I know that was probably a little more confusing. If you do want more clarification, please leave any comments below. I'll try my best to explain it even better than I did. I know a combination of Iron Condors and Strangles kind of oppose each other, but the whole point of it is that they are kind of hedging against each other, so that if the premiums get crushed and the stock doesn't move a whole lot, then even though you lose value in the Strangle, you still can't take advantage of the Iron Condor. Well, on the other hand, if the stock does spike or crash quite a bit, then the Strangle ends up being very, very profitable, because especially for Disney, the farther out of the money were really cheap. It was only $65, for example, on both the calls and puts. So that's what I was trying to take advantage of, okay? So I hope that helps you guys out. Please to smash that like button if this helped you. Subscribe if you haven't already, and hit that notification bell. And thanks again for watching. Until next time.